In the mornings when I wake up, I share my analysis with our Legends Pro community. And I always talk about, I've shared this trading scenario, I've shared this trading scenario, keeping the Legends up to date. First link down in the description. That is what I often talk about. And today I thought I'm going to share my morning update to the Legends Pro community with everyone else. In this update, basically trying to make sense of this massive dump here to the downside and what is now the highest probable trading opportunities. I always talk about the first link down in the description. And as you can see below this video, the first link down in the description is where you'll be able to join our Legends Pro community. Okay, when I select that link, go down in the description. There's a video about myself and Andy where we talk about the Legends Pro community, and also we have a free section inside of Discord, the paid section. And today's update, I will be focusing on what did I share with the Legends Pro community, trying to make sense of this dump here to the downside and highlighting the probable trading setups that we are looking at for today. So if you're not already signed up, go and sign up, and I hope to see you inside. Also, there's an amazing competition running at the moment on Bluffin. First link down in the description to sign up. Okay, and then I also have the trading tournament on Bluffin at the moment. When you select this link, you'll get to a page that looks like this. We are going to compete for a prize pool of $100,000. Okay, and there's still 11 days to register for this competition so that we can have that opportunity to trade and share the pool of $100,000. Let's dive into the Legends Pro update that I shared this morning. Legends, morning, welcome. Wednesday morning here in South Africa. Whew, what an aggressive dump here to the downside. Trying to make sense of it, but I mean, I actually had a couple of, I know some of you, I saw some crazy P&Ls inside of the money shots. Some of you just shorting the crap out of this momentum to the downside. Well done. 500%, 600%. You guys are absolute degens. So congratulations. I actually made money last night with the bounces to the upside. Okay. So, first trade I took was during my live stream, by the 50% FIB level over here. Okay. And you know, the fifth wave target, we measured it out. We had the naked point of control. There was a lot going on here. From a supporting perspective, potentially the end of the fifth wave. And then, you know, I entered this trade live on my YouTube stream last night. You know, and I did tell everyone, take profits on the way up. And I remember as we were moving up here, I protected my position, and I even took profits while I was in the live stream and telling people I'm taking profits. It's part of my rules. And I took a little bit more profits inside of this consolidation area that I said, yes, I was expecting the highs to be claimed. Okay, as a final TP, but you just never know, right? You just never know. So I took more profits over here, and then bam, I got stopped out. I didn't re-enter this trade over here. The trade that I did re-enter, okay, is I often speak about when you hit a major FIB level for the first time, you usually get a nice reaction. So when you go onto the 4-hour time frame, this is the FIB that I was watching, a FIB from this low to the high, the 382. So when I zoom back into that price action, okay, this is where I took another long, basically using the FIB as an SFP level. Okay, and you can see this is where I entered another long, right? Exactly. As we tapped this FIB level, I think my entry was a little bit higher. I entered over there, but I saw the reaction, and as we moved up, I protected my position, and I literally just aggressively took profits on the way up, And I think here is more or less where I closed my position. I was happy with the profits, and then bam, got stopped out at break even. Well, I think I closed my position, so there was nothing to stop out. Okay, but then we fell back to the downside. So I played the reaction because I know usually, okay, in like 8 out of 10 times, when you hit a major FIB level for the first time, you do get a reaction. And it's either going to be the reaction that does this, or it's just going to give you a bounce and continue to the downside, which it did. Okay, and now we're actually carrying, but you can see we are still trading around the 382 major FIB level. This is where we're getting the bounce at the moment. So you are still getting that major reaction after hitting this major FIB level, the 382, from the lows to the highs that we've made. I mean, yeah, around about this time is when I went to bed anyways. I wasn't trading anymore. But I can tell you guys now, if I was awake, okay, and I was still trading, I would have most probably longed this area over here, okay, breakout trade, where you get acceptance back above the 0.382 Fibonacci. But yeah, it would have been a small position, low leverage position, because I mean, your stop has to go here. You're targeting, potentially, you are targeting the highs over here, okay. And also this diagonal trend, which I'll speak about in a moment. So it is not easy where we are at the moment from a trading perspective. Okay. I would like for a little bit more price action to develop in terms of where exactly we are. The one thing that, from a simplicity perspective that I am keeping an eye on is, the other thing I wanted to highlight here is what a beautiful break of trend over here. Okay. So for those of you playing the D line strategy, I mean, bam. That's why I said I would have gotten in here. Okay. So beautiful break of trend, and we're currently finding upwards momentum. Also, from a simplicity perspective, I'm now looking at the break of this trend. But I just want to put a word of caution out there is that if we do break this trend, let's say we range here, and we do break this trend, I don't think, this break is going to come and claim these highs. Honestly, from a technical perspective, and I will go through the larger time frame now, I think it's going to be one of those moves that potentially goes up and it falls back down. Okay, so you need to be aggressive with profit takings over here. Take your Fibonacci from the high to the low. Start taking profits by the FIP levels, the key FIP levels, 50%, 618, close out the position, because you could definitely be making a lower high over here and continue the momentum to the downside. Let me go back here onto the 4-hour time frame and tell you guys where my thinking is at. Okay, so let's take all the FIBs here out the way. Take the trend line out, just clean up the chart a little bit over here. So this is where my thinking is at, and I have to, how can I say it, as a technical trader, you're always looking for bullish and bearish scenarios. And if I do have a bullish scenario that is not invalidated, I have to give that scenario the benefit of the doubt and see how it's going to play out until it's invalidated. So when I look at this structure, it is still intact. Okay. I always have this parallel channel, and I keep on taking it away. I just want to tell you guys the reason I have this yellow parallel channel over here. Okay, so let me just make it maybe a little bit more lighter, so it's easier to, is it this one? Yeah, there we go. So it's easier to see the price action inside. Okay, a rule for a leading diagonal. Remember, we had a leading diagonal yesterday that I spoke about. Yes, obviously we fell to the downside, but the leading diagonal played out beautifully where we formed the fifth wave and we just fell down. Okay, the reason I have a parallel channel is that when you take a parallel channel from 1 to 2, okay, that's how you connect it. From 1 to 2, you connect it, and you can then connect it to this pivot just to get your sloping to the right side. The invalidation for a contracting leading diagonal is that wave 4 is not allowed to tap the channel. Wave 3 is not allowed to tap the channel because then it's a parallel channel and it's not a contracting diagonal anymore. Okay, so this is why I have the channel here, is to say that if we are now potentially busy with the fourth wave, okay, and this is what I'm saying is I have that trend. Remember, I have that trend over there that I'm tracking, the breakout. So we could be forming a 3-wave structure and we're going to go down again. So there's a benefit of playing this move here to the upside. So I'm still sticking to my theory over here that this structure is still intact until invalidated. So there is a high chance that this structure is a 3-wave structure, which actually makes way more sense for me at the moment, and I'll show you guys now on the smaller time frame, than an ABC to the downside. Okay, it actually balances way better as a 3-wave structure. Like this was a 3-wave structure, and we were all trying to count 1, 2, 3, 4. Nothing really made sense. Okay, and it just beautifully balanced more as a 3-wave structure, hitting 3-wave structure targets over there. This move where we ended right here also hit a 3-wave structure target to perfection. It actually makes the 5-wave impulsive structure to the downside doesn't really make sense compared to a 3-wave structure. So we could now have another 3-wave structure here to the upside to complete this wave and then fall back down again to complete the 4th wave. So I'm going to keep on playing this structure until it's invalidated. Okay. Because it has not been invalidated. We are still inside of a contracting diagonal. The 3rd wave retraced beautifully. We have 3-wave structures, 3-wave structures, 3-wave structures. Guess what? This could also be a mini 3-wave structure, and we're going to form another 3-wave structure here to the upside and then dump again, make the world bearish. Okay, we're going back to $40,000, and then we get another 3-wave structure to the upside, like what happened over here. So still intact for me until invalidated, and it's purely just from a technical perspective, because now what makes more sense for me when I look at this structure, this is where things now become really interesting, where it actually now gives a little bit more weight to what happened over here. If I still if I'm still keeping an eye on this structure in terms of it is still playing out to perfection. So when I switch this off and zoom into that structure, this is where things become interesting. Just not sure which time frame will work better. Okay, so I know, okay, that we were counting this as, let's just do a quick recap, as a 1, 2, 3, 4, 5 to the downside. Okay, an extended fifth wave. The one thing we have to acknowledge is that extended fifth waves are very rare. They do play out, but it's not a common structure. It's very rare. And usually when you get an extended third wave is when your third wave, extended fifth wave, is when your third wave is not extended. So what do I mean by that is that usually, so the fifth wave extended is already rare in Elliott wave theory. And maybe on those rare occasions that it does play out, the structure has to look something like this. So you have a 1, 2, 3, short 3, 4, 5. And how it often plays out is that when you take a fib extension, okay, from the bottom of 1 to the top of 1 to the bottom of 1, you can see that your third wave usually, okay, most commonly has a 1.618 target. But the rule is your third wave is not allowed to be the shortest. So here you can see, for example, the third wave is just a little bit longer than the first wave. Okay, there's the 1-to-1 extension of measuring the first wave. So when your third wave is longer, but not by a lot. Usually when you tap the 1-to-1 extension, sometimes the 1.236 on your third wave, then you increase the probabilities for an extended fifth wave because the third wave was so short. And this is the problem that I see over here. Okay, so when I take a fib, so I'm just throwing some education in here to try and determine the highest probable scenarios over here. Okay, so when I when I take a fib from the top of 1 to the bottom of 1 to the top of 2 to go and measure how long the third wave is, you can see that the third wave is already overextended, which is a third wave target, 2.618. And now you have an overextended third wave, and now you have an overextended fifth wave. It's very rare, okay? It just needs to be said. It's very rare. It doesn't really happen, okay? Because now you have a rareness upon a rareness, which makes the scenario almost invalidated. Okay, but looking at that leading diagonal that I've just shown everyone, this is now where things become a little bit more interesting, is to say that, well, stuff the 1, 2, 3, 4, 5. Maybe we counted this structure incorrectly, okay? Because I mean, the structure only starts revealing itself when the more data you have. This to me looks more like a three-wave structure, okay? 1, 2, 3. Or a 1, 2, 3, or a 1, 2, 3. And then where this now becomes interesting is when you start taking fib extensions, okay? Just want to see to perfection. Okay, cool. So this is where it now really becomes interesting to me, is that this looks to me like, oops, where's my pen? This looks to me like a WXY. And look at how beautifully we tapped the 1.236, which is considered a maximum target for a Y wave. Very common maximum target, okay? 1-to-1 extension, 1.236. So at the end of the day, legends, regardless of how you count the structure, it does count more beautifully as a WXY three-wave structure, not a 1, 2, 3, 4, 5, like I've just explained, which then tells me that that leading diagonal is gaining probabilities. So we could potentially see another three-wave structure here to the upside, okay, and then repeat this back to the downside, 1, 2, 3, to go and complete that bigger fourth wave that I've highlighted in the leading diagonal. Okay, so I hope this is putting the picture painting the picture for you guys, how I zoom out onto the bigger time frames, look at the leading diagonal, zoom it back into the smaller time frames, and now the structure makes way more sense to me. So what I'm looking at over here is a three-wave structure to the upside. So there is definitely a possibility that we can still find upwards momentum here to at least claim these highs or turn around before we claim the highs. But the probabilities of making a lower high over here is higher than taking the highs and just break out here and off to the races we go. So I want to see for that leading diagonal to stay intact. I want to see a three-wave structure now back to the upside and a massive three-wave structure back to the downside. So the dump is not over, but I do think we're going to get a little bit of a relief rally over here. Okay, but also not off the cards, to do this. Okay, grab the low again and then off to the races you go again. Basically what happened over here, okay, where you end the W wave and then you have these B flat corrective structures where you take the low once again. Okay, so, very interesting, very cool. Okay, Dewald, but, from a trading perspective, we want to make money. So what I'm trying to say is what Elliott wave theory helps me to do is it gives me directional bias. Now, because I have directional bias, I am looking for longs in this structure, okay? And, well, where we are at the moment, I'm not going to trade. It's just a no trading zone for me there at the moment. So that's where then I bring in my trend lines to say that, okay, I will pray the break of trend because I've missed this trade. I'm not in this trade at the moment. I'll wait for the break of trend. And I'm definitely keeping in mind that this could be a three-wave structure. And then we have another three-wave structure here to the downside. So I am definitely going to be aggressive with profit taking if we have a breakout here to the upside. Okay. Yes, the market is here to surprise us. The market is here to surprise us. We just never know. But from a day trading perspective, we can make significant. Even when we tapped that 0.382 here for the first time there, I made a significant amount of cash just with that small little move up there. Good risk management, significant amount of cash. I'm out, went to bed, happy, dump. We found some support overnight and now I'm looking for a next trading setup. So yes, legends, that is basically what I'm looking for here at the moment. Where we are at the moment, where price action is at the moment, not really a trading zone for me. What I have noticed when I zoom into this structure is I can count a five-wave structure here. Okay, 1, 2, 3, 4, 5. And maybe we're going to make a larger ABC. If I do see some bullish CVD building up as we make the dump here to the downside, I might attempt a long. Okay. I need a little bit more price action before I'll make that trading decision, but what I will be looking at is a fixed range. Okay, here by the point of control. Okay, so what I would like to see, I know this is a range of this zone that we are in at the moment, but if price, okay, it can still go a little bit higher because, fifth wave can go a little bit higher, but I do count a five-wave structure here. Okay, so if we do get a rejection here to the downside, I'm looking at the point of control, okay, and also when you take a Fibonacci, we need to wait for the price to finish forming. I just want to see where is the low. Okay, I don't know if price is still going to shoot up here, but that's the pivot I have now. But look at that, right? 618, point of control. If we come down here and I see bullish CVD, I will attempt a long, okay? Stop below the low. So low leverage position or low position size for me because the stop loss is quite far, okay? And because I am anticipating a potential break of this trend. So if you can get an entry in this zone, okay, with some nice bullish CVD potentially building up, okay, you don't have to play this breakout. You just ride the momentum to the upside. Or you could add a little bit to your position and it will just drag your entry up. You can still protect your position. Okay, so for me, that is at the moment the best trading setup that I do see. Obviously, we like our pivots and our double bottoms. So if price does not make any bearish CVD or bullish CVD on its way down, it loses the point of control. An SFP from the low, I will consider still an SFP from the low. This is the trade that I would love because then you have an absolute fantastic entry. Okay. Risk management is also so much better with swings failure patterns. I don't have to have this risk. Okay, when I enter this trade, I can have a smaller stop loss and a more aggressive entry. Okay, so from a longing perspective, SFP from the low, 0.618 point of control, And that is if we do get a three-wave corrective structure here. As long as it's pumping, I'm not interested. It's just a no trade zone for me at the moment. I do see that there was a couple of opportunities that you could have traded from a D-line perspective. So the first one was the breakout over there. Okay. And then when you zoom into the smaller time frames, guess what? I mean, it's quite obvious, right? There's another breakout. Okay, and there was another breakout. Depending on what time frame you want to trade, it's just, breakout, 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 breakout. And, there's money to be made. From these small little breakouts, there's definitely money to be made.